morning and happy Friday to you. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. The European Central Bank says borrowing costs will stay at current rates or lower through 2020, signaling more monetary stimulus for the euro area economy. Rajya Sabha ratifies amendments to the Right to Information Act after the motion pushed by the opposition to send it to a House committee was rejected. Former Economic Affairs Secretary Subhash Chandra Garg has opted for voluntary retirement from the IAS, confirming a Bloomberg Newsbreak. This was a day after he was transferred to the Power Ministry. Tata Motors reported its fourth loss in 5 quarters as JLR continues to remain a sore spot. And 4 nifty companies, including Bajaj Auto, Maruti, Vedanta and JSW Steel will be reporting their first quarter numbers today. Let's talk about the US markets first. They fell off record highs on Thursday after a slew of corporate earnings were mixed. Investors continued to assess the impact of trade negotiations between the US and China and fears over global growth. Amazon's weaker than expected earnings also soured sentiment on Wall Street. Renita Young of Bloomberg News tells you what happened during that session in this report.
U.S. markets ended lower on Thursday, falling from record highs as investors continue to assess a mixed bag of corporate earnings. Investors are also still worried about global trade concerns, as well as the threat of slowing global growth. Now, the latest company to come out with earnings was the world's largest retailer, Amazon.com, after the market posting worse than expected results, shares falling post-market. We also saw 3M coming out during the session, initially advancing on beating analyst estimates. However, since pared back those gains, Tesla plunging on weak results, and Ford also slumping as gloom in the global auto industry continued to spread. And next up will be Google parent Alphabet, as well as Hilton Worldwide and McDonald's. Meanwhile, during the session, we also saw the Bloomberg Dollar Spot Index rise to the highest in more than 5 weeks. We also saw yields, WTI crude oil, and gold dropping. No surprise that gold is dropping since it's denominated in U.S. dollars. It would go in the opposite direction as the U.S. dollar typically. And that's a look at your Thursday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
Well, the euro was seesawing yesterday, shall we call it that, and European bonds headed higher, the yields on them, and that's all because of what was happening at the European Central Bank. They held key interest rates and at the policy meet yesterday. However, President Mario Draghi said that borrowing costs will remain the same or lower through 2020 in order to prop up the slowing euro area economy. Kathleen Hayes of Bloomberg News brings you more.
Central banks, since the great financial crisis, even beforehand, but forward guidance, they now consider a policy tool to a certain extent. And what Mario Draghi guided us toward today was a euro area economy that is weakening, especially in manufacturing, led by its biggest economy, Germany. And because of all this, they need to be looking at how they're going to add more stimulus, not when. Let's listen to exactly what he said about the economy that made so many people sit up and listen.
Generally speaking, you have resilience in the service sector and the construction sector. At the same time, this outlook is getting worse and worse. And it's getting worse and worse in manufacturing, especially, and it's getting worse and worse in those countries where manufacturing is very important. But because of value chains, this propagates all over the Eurozone.
Now, it's interesting, going into this meeting, people were not looking for the ECB to cut on Thursday. They figured they would wait until September, but a very weak purchasing managers index from Germany just yesterday made people think maybe they would do something, at least send a stronger signal. Well, many people say the signal he went on to send about stimulus that's coming was strong enough. Let's listen.
In this environment, inflationary pressures remain muted, and indicators of inflation expectations have declined. Therefore, a significant degree of monetary stimulus continues to be necessary to ensure that financial conditions remain very favorable and support the euro area expansion.
The policy statement made it clear from the ECB that they're considering cutting their negative rate more negative, renewing bond purchases, and maybe being more aggressive on their forward guidance. And let's also remember that business sentiment, as measured by Germany's IFO Institute, is now at its lowest since 2009. And one of the officials there said it looked like business sentiment was in a free fall in July, expressing some concern about recession.
All right, so growth concerns clearly persist. Let's take a look at how the Asian markets are faring at the end of the week. I'm joined by Sophie Kamruddin, who's live from the Bloomberg studio in Hong Kong. Good morning, Sophie. How are the Asian markets looking as of now?
Well, this Friday, we are seeing a risk-off mood with the Asian stocks falling for a second straight session, while regional bonds are on the retreat and the dollar just marginally lower, but set for a second weekly gain. And over in Seoul, the Kospi is falling for a third straight day as we get a mixed set of results amid more signs of economic uncertainty. So we have the Korean won on the back foot once again in the 1186 zone as consumer confidence took another hit in South Korea in July to fall for a third month. Now, the yen is trading near a 2-week low, and the Nikkei 225 is set to halt a 3-day advance as poor earnings are weighing on benchmarks in Tokyo. Now, stocks are also falling in Shanghai, with all sectors in the red at the start of cash trade, and the Hang Seng is set to snap a 3-day gain as we digest the steep drop in exports for the city. Now, I also want to quickly mention Nissan shares, which are falling by as much as 2.7% on its results that show prospects are getting bleaker, which has prompted the car maker to cut thousands more jobs and reduce production capacity. Back to you.
Thanks so much for that, Sophie. Well, let's talk about geopolitics now. Geopolitical headaches continue to mount for the United States, and that includes negotiations with North Korea that recently launched 2 ballistic missiles, yesterday in fact. Secretary of State Mike Pompeo told Bloomberg that he remains convinced that there is a diplomatic solution to the North Korea issue. He is also hopeful of China doing the right thing, those are his words, in the Hong Kong crisis. Listen in to what he said.
Everybody tries to get ready for negotiations and create leverage and create risk for the other side. President Trump has been incredibly consistent here. We want diplomacy to work. We want Chairman Kim to deliver on the promise that he made to President Trump, which is that he would denuclearize. I was there the day they signed the document. I've had Chairman Kim tell me this personally no less than half a dozen times. We remain convinced that there's a diplomatic way forward, a negotiated solution to this. We look forward to the opportunity. Chairman Kim told President Trump that he would send his working team to negotiate with ours.
Next week, right?
It'll be in a couple weeks, I anticipate. Everybody's got to get schedules right, and everyone, more importantly than the date, if we wait 2 weeks or 4 weeks or 6 weeks, to make sure that we've had enough conversations so that there can be productive dialogue when the teams get together. That's the real objective. If it takes us another 2 weeks or 4 weeks, so be it.
And the situation that we alluded to China, but these protests in Hong Kong, the Hong Kong authorities have rejected a request by protesters to take the streets on Saturday. I mean, are you concerned about China's military intervening in Hong Kong?
The President, I think, captured it right when he said that we need China to do the right thing. We hope that they'll do that. We hope that the protests will remain peaceful. We think that's important to avoid violence wherever there are protesters. We always think that's in the world's best interest, and that's certainly the case here as well.
You know, it is so interconnected with China, whether it's North Korea or whether it's U.S.-China trade talks. And just this week with Boris Johnson assuming power, I saw what you tweeted out just this afternoon about you're hoping that you'll be able to work with Boris Johnson on U.S. initiatives. I'm curious if you think that his government and his policies will be perhaps more in line with the Trump administration on something like Huawei.
I think so. We'll see. Only time will tell. I spoke with my counterpart, Dominic Raab, just a couple hours back. He's busy. He's still getting briefed up and making sure that he's ready. But we talked about that. We talked about the importance of these two democracies working together. I think we'll find that there's a very good working relationship there. But I'd say this: we already work together on most things. We work together on segments of the Iran file as well. Everybody talks about the differences. They've stayed in the deal. We got out. But there's large pieces of the pressure campaign against Iran that the United Kingdom understands. And there's a lot of places we work together and on making sure that their ships are secure. I'm confident that we will work together.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Agam. We've got at least one viewer who's saying that the weekends are boring because there's no markets. But then we've got several other viewers, I'm sure, who are saying that it's a good thing that the weekend's coming today.
Yeah, I go with the fact that it's the good thing that the weekends are coming. Weekends are very welcome. But for now, there's one more reason for the weekend to be welcome in is because of the fact that we're looking at more weakness possibly here. Now, as far as your SGX Nifty futures are concerned, we are looking at a 21-point drop right now. We're not looking at too much of a movement there. But let's move on and talk about several of your indices. So we did have some amount of weakness coming in as far as your Nifty 50 is concerned. The mid-cap and the small-cap indices did see some gains coming through. Let's move on and talk about your sectoral picture. And of course, the banking index, that is the Nifty PSU banking index, did see about, declines there. Nifty banking index, advancing by as much as 0.25%. As far as your ADRs go, we are looking at a decline of around 4% for Tata Motors. So, quite naturally, it will react to earnings. And, we do have Vedanta as well, which has actually advanced by around 3.5%. Let's move on to talk about the other ADRs. Okay, you have Dr. Reddy's and ICICI Bank. Now, coming down to your FI flows, and for a change, we haven't seen as much of an outflow from FIs, and DIs have also bought only to the tune of nearly 400 crores. So we watch out for that. And of course, Bajaj Finances will be in focus, and as will be Tata Motors today, Reliance Industries and ITC among many stocks that did bear down on the indices, which some of those losses were cancelled out by TCS and Infosys in terms of gains. Now comes the interesting part, and that's the futures and options space. And of course, we did see that expiry come through. We did see a 58% increase in open interest towards the August futures, and the Nifty banking futures also seeing a similar increase of around 38%. Moving on, let's talk about your rollovers, and rollovers currently stand at around 74%. So surprisingly, the rollovers are largely in line with the previous 3-month average for the Nifty. To take a look at the Nifty banking rollovers, that also stands at around 76%. So there hasn't been as much of a let up, despite the fact that we have seen so much weakness in the indices. Moving on to your open interest distribution, and currently we are looking at 11,000 coming back into focus based on maximum open interest. That's the 11,000 put. We'll be watching out for that on the higher end. We don't have too much going for so far, but this will always be a good news for those who are long in the markets. A lot more writing around the 11,300 mark too, and 11,300 call by that I mean. Moving on to your other variables. Of course, we saw further decline in the India WIX, so that's come off too. And as far as your stocks are concerned, Shriram Transport Finance making a sharp up move, a lot of longs coming through. Besides that, we also have ICICI Prudential, another one of those stocks which are advancing with fresh longs building in. However, from the Nifty 50 space, we have Tata Motors, which is under pressure, and we're likely to see some more pressure based on the kind of earnings that we've seen post-market hours. And of course, Bajaj Finance, a 43% added in open interest towards shorts. It's not always that you see so much weakness in Bajaj Finance. Well, this week is just one of those. So we'll be watching out for some of these big names, Alex, and how they react to earnings going forward.
Absolutely, and big earnings today, also 4 Nifty companies to talk about. Thanks so much for that, Agam. Let's go to the headlines now across the globe. Paul Allen of Bloomberg News brings you the first word headlines.
Hong Kong exports plunged more than expected in June, and marking an 8th straight month of declines. And there are warnings that there's no relief in sight. Overseas shipments declined 9% to the equivalent of $39 billion. That's the worst result since 2016, and well below the median estimate of a 2.3% fall. Hong Kong is struggling with the trade war, public unrest, and the global slowdown. trade tensions are threatening to drag export-reliant Singapore into recession. The city-state's economic data have gone from bad to worse this month, and exports have slumped to their second worst pace since the financial crisis. At the same time, the Purchasing Managers' Index fell into contraction for the first time in 3 years. The economy also shrank dramatically in the second quarter. U.S. Secretary of State Mike Pompeo says he'd be willing to fly to Tehran to discuss American foreign policy and explain how the Iranian leadership has harmed the Islamic Republic. The Trump administration has ramped up sanctions on Iran and withdrawn from the 2015 nuclear deal. The president has also said he's open to direct talks for a new deal that would strengthen curbs on Iran's ability to make nuclear weapons.
I would welcome the chance to speak directly to the Iranian people. I've talked about this before. Zarif gets to come here, he comes to New York, he drives around in the most wonderful city in America, and he speaks to the media, he talks to the American public, gets to put Iranian propaganda out into the American airwaves. I'd like a chance to go not do propaganda, but speak the truth to the Iranian people about what it is their leadership has done and how it has harmed Iran.
Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Let's turn to news back home now. Just hours after being shunted out of the Finance Ministry, former Economic Affairs Secretary Subhash Chandra Garg opted for voluntary retirement, confirming a Bloomberg Newsbreak that he was planning such a move. Garg on Wednesday evening was transferred to the Power Ministry in a bureaucratic reshuffle that saw Divestment Secretary Atanu Chakraborty succeeding Garg as the new Secretary for Economic Affairs. Let's first listen in to what Garg told reporters outside the Finance Ministry.
Sir, when you are going to take the charge of Power Ministry?
Tomorrow.
Okay.
Yeah.
And the decision on VRS is also well thought out, sir. You're giving time to the government.
Everything is well thought out.
You're giving time to the government to think over your decision, sir.
No, I am required to give 3 months notice, so I have given 3 months notice.
Interesting, he also tweeted about this, and he said that that he'd learnt a lot at the Finance Ministry, and that would be his last tweet. But on the sidelines of this, the bond markets were sent into a tizzy after news agencies reported that the Prime Minister's office was opposed to selling debt in foreign countries. The 10-year bond yield jumped 12 basis points, which is the most since January, to 6.55% before cooling off just a bit later. Fixed income experts are now worried about the lack of clarity on the timeline and quantum of the bond sale. And experts also warn that the abrupt transfer of Subhash Garg, who was overseeing the issuance, will not be taken well by the markets. Let's talk about earnings now. Tata Motors' losses widened in the June quarter thanks to falling sales and higher discounting in both the domestic business as well as in Jaguar Land Rover. Yatin Mota is here to tell you all about the fine print.
Well, it was yet another disappointing quarter for Tata Motors. On a consolidated basis, we saw the revenues decline 7%. If you look at the EBITDA, that came in little over 3,800 crores. We were expecting EBITDA margins as well as absolute EBITDA to be 4,030 crores and EBITDA margin of 7%. EBITDA margins came in at 6.2%. So clearly, the operating performance was disappointing. Not only that, on a consolidated basis, Tata Motors posted a loss of 3,680 crores versus a loss of close to 1,800 crores last time, same period. So the losses basically doubled on a year-on-year basis. More importantly, if you look at JLR, there the margins came in at 4.2% versus our expectation of 5.2%, and the revenues for the JLR entity were down nearly 3% on a year-on-year basis. More importantly, if you look at the standalone India business margins, that came in at 6.7%, slightly better than the street expectations. But if you look at the overall management commentary, they are still confident of delivering a 3 to 4% EBITDA margin range for JLR for the full year. More importantly, they also expect the China markets to now stabilize from the declining growth path that was seen earlier on the back of new launches, especially the new Evoque. And when I spoke to the management regarding the outlook, as well as the changes on Ind AS, which are the accounting standard change, the management said that there is no material impact on the EBITDA. However, on the balance sheet front, the net debt has gone up by nearly 6,000 crores because of change in accounting standard, especially to do with the lease and the rental portion. So on an overall basis, except for the China market stabilizing silver lining, the earnings were largely disappointing.
And that could well be the case with Maruti Suzuki as well. The company is expected to post an 18% decline in volumes coupled with high discounts, which in turn is likely to hurt the operating performance of India's largest car maker. Yatin is going to take you through what is expected here.
Well, the auto index is close to a 3-year low. More importantly, market leader Maruti Suzuki is expected to again see weakness in the overall result, given the fact that in the first quarter we saw 18% decline in the sales volume. Revenues for Maruti are expected to decline by 15%. EBITDA expected to decline by 40% on the back of lower volumes as well as higher discounting. Also, the profits are seen lower by 32% to come in at 1,340 crores. Of course, the steep fall in EBITDA is not captured in the net profit front, given the fact that the other income this time would be supporting the profit, to a certain extent. Margins for Maruti are seen at close to 10.4% versus a level of 14.9%. So clearly, the lower volumes and higher discounting impacted the margins this time. Also, apart from the earnings, the management commentary on the India domestic demand, especially to do with the rural markets, is something important to watch out for apart from the earnings this time.
Now, Bajaj Auto was possibly the only auto stock that showed some resilience during the auto slowdown. Yatin is still here to take you through the expectations from the two-wheeler maker.
For Bajaj Auto, it will be better than the other two-wheeler companies, largely to do with the fact that their volumes in the first quarter were up 2% versus the industry, which was on the declining path. Revenues for Bajaj Auto are largely seen flat on a year-on-year basis. EBITDA on absolute basis seen down by nearly 8% on lower pricing as well as adverse product mix. Profits for Bajaj Auto on a standalone basis are seen at 1,080 crores and margins seen falling to a level of 15.7% versus a level of 17.3% on a year-on-year basis. Of course, as I was mentioning earlier, the overall volumes growth by 2% will aid the overall profitability for Bajaj Auto this time versus the other two-wheeler players. Also, the lower commodity prices as well as recent price hikes taken by Bajaj Auto will be supporting the margins to a certain extent on a sequential basis. Of course, the management commentary on the kind of market share gains that they have made in the first quarter, and more importantly, what is the outlook for demand, especially ahead of the festive season, is something important that we'll be watching out for here as well.
Sticking with earnings, it is likely to be an operationally weak quarter for JSW Steel as sluggish demand domestically and lower steel prices will impact the company's financials. Nikki Mitchandani is here to take you through the expectations.
Well, JSW Steel will be the first steel company to report numbers, and we're not expecting good set of numbers. Top line, at least, we're expecting a flat performance there. We're looking at a decline of 3.3% at a number of 19,800 odd crore. In terms of the bottom line performance, we're expecting a dip of more than 50% year-on-year basis, and the operational performance of the company too is expected to take a hit of almost 25% in this quarter at a number of 3,793 crore. If you look at the margin picture of the company, we're expecting a contraction coming in at a number of 19%, which compares to 25% that we've seen in the corresponding quarter. Essentially, JSW Steel is divided into three bits, where the standalone business is a major contributor towards the revenue of the company. And in that terms, we're not looking at great performance coming in from the India business. We're looking at the EBITDA performance of 27% downtick. Volumes are expected to be sluggish, 2 to 3% kind of decline to a number of 3.75, and also the seasonal impact is expected to weigh on the volume performance of the company, in effect to which the EBITDA per ton performance, do keep an eye out in this number, that is expected to be down by 26.4% and a number of less than rupees 10,000 per ton, or precisely 9,286. In terms of other segmental performance, we're looking at US plate and pipe mill EBITDA, which is expected to contract substantially to 25 crore as compared to 71 crore on account of lower spreads. And if you look at the coated business, there the EBITDA is expected to halve to 61 crore as compared to 122 crore. Three things that go behind the making of the numbers will be the volume performance, which is expected to be flattish, production cost, which is expected to be higher, and the realization is expected to be lower on account of lower LME prices net from all the divisions typically. Things that we like to keep an eye out will be the outlook coming in on the steel prices, along with the input cost pressures, and also fundraising plans, if any, for JSW Steel. Back to you.
All right, the same factors are also expected to impact Vedanta in the first quarter. The mining giant will also be impacted by the trade war and the slowing global growth. Nikki is here to take you through the expectations as well.
Well, Vedanta is expected to report rather subdued set of numbers. If you look at the top line growth, we are estimating a 5.5% downtick there at a number of 20,916 crore. In terms of the bottom line performance, we are looking at a downtick of 13% and also expecting a decline essentially coming in from the operational performance of the company at a 12.2% downtick as compared to at a number of around 5,521 crore, which compares to nearly 6,284 crore. In terms of the margins picture of the company, we're expecting a contraction there. 26% compares to a number of 28%. Roughly, if you look at the segmental performance of the company, now there are many business verticals to it, but zinc, aluminium and oil and gas business, they form more than 80% of Vedanta's consolidated EBITDA performance overall. Copper business, I'll start off with that first. It's expected to be a loss-making entity on account of the shutdown that the unit has been witnessing. Aluminium business is expected to see some amount of decline, 80% rather decline coming in year-on-year basis on account of lower LME and no meaningful benefit coming in from the raw material decline that we've seen in the quarter. Zinc India, that has reported the numbers, a rather good set of numbers there, but then was down by as much as 9%. If you look at the oil and gas business, we are expecting higher crude oil prices to offset lower volumes and in turn lead to a flattish growth coming in from oil and gas division. Steel business, however, is expected to do well for Vedanta. Two things that we like to watch out for in Vedanta's earnings will be the progress on Gamsberg mine, and apart from that, any given commentary on the base metal prices, along with that on the input cost pressures of the company.
All right, well, away from nifty earnings, Bank of Baroda reported its quarterly results post-market hours yesterday, and these were the first results for the lender after it completed its merger with Dena Bank and Vijaya Bank. The bank returned to profitability compared to the same period last year, while asset quality saw a marginal deterioration. Vishwanath Nair brings us more.
Bank of Baroda reported its April-June quarter results later on Thursday. Now remember that this is the first quarterly results that the bank has reported after it completed its merger with Dena Bank as well as Vijaya Bank. As far as the net profit goes, Bank of Baroda reported a net profit of about 710 crore during the April-June period. This was compared to about a 49 crore loss in the last year. Of course, these comparative figures are also of the amalgamated entity. On the gross NPA side, there has been a slight increase with the gross NPA ratio at about 10.28% in the first quarter compared with about 10% in the March quarter. Similarly, net NPAs have also gone up by about 30 basis points. What the bank is saying is that fresh slippages during the April-June period was about 5,600 crore, which was lower than what the bank has been seeing in the last few quarters. So that is likely to continue improving with slippages coming down as well as the recovery numbers going up. But during the first quarter, the bank had reported lower recovery numbers, primarily because there was a lot of amalgamation related work going on, and now that that part of the work is complete, the bank is expecting that the recoveries should improve. On the loan growth side, the bank will focus on improving the quality of corporate credit that is giving out, not only selecting better customers but also improving the processes behind giving those loans. While on the retail lending side, it will focus again on home loan as well as auto loans, which have been pushing up the retail growth for the last few quarters. Overall, for loan growth, the bank is expecting about 15% for this financial year. Most of this will come in towards the end of this financial year. Of course, we still need to see whether all of this guidance will stand true by the end of this year, because in the past, Bank of Baroda has thrown up some surprises whenever it reports its quarterly results.
And do stay tuned over the course of the day. We'll be speaking to the bank's MD and CEO PS Jayakumar during the day, and you can catch that on Bloomberg Quint Live. Let's talk about some of the stocks that you have to watch out for in trade today on account of being in the news. Somit Sarkar is joining me to tell you all about the stocks in news. Good morning, Somit. What's on your list?
Good morning, Alex. On the stocks in news, firstly, it is Bajaj Finserv. Now, the numbers were for the lending business were largely in line for Bajaj Finserv, but on the insurance business, the growth was muted. Now, if you see the overall revenue growth, that was nearly 40%, but the company's net profit was only 2.4%. Now, that was because the company had provided for 60% of its exposure to bonds of Dewan Housing. Now, the company has exposure of nearly 225 crore rupees, of which 60% has been provided for in this quarter. Secondly, PVR. Now, that stock will also remain in focus because if you see the numbers looked strong, with revenues growing nearly 26% and EBITDA jumping nearly 2 times compared to last year, but that was because of the Ind AS 116 adjustments. Overall, the numbers were just in line with analyst expectations. Persistent System will also remain in focus because the numbers were below estimates. The revenues were flat compared to last quarter, but the EBIT was down nearly 4% and the margins came in lower at 9.6%. And this is because the digital business, after recording a strong performance in the fourth quarter, dropped nearly 6% in the first quarter of financial year 2020. Emphasis will also remain in focus, and the numbers were largely in line for the company. Revenues were up by nearly 2%. EBIT came in lower by 5%, while the margins came in at 14.5%. Now, this weakness was driven by lower than expected growth in the direct channel revenues for the company. Westlife Development will also be in focus because we see the company's revenue that were higher by nearly 12%, but the company also, but on the EBITDA front, the numbers saw a bump up of nearly 47%. Margins came in higher at 12.8%, while the same store sales growth was lower at around 6.7%. Now, lower same store sales growth was attributed to high base, general slowdown, and weakness seen in the dine-in segment. Lastly, Biocon will also remain in focus. Now, the numbers were largely in line. Revenues were higher by nearly 30%. EBITDA jumped by nearly 84%, while margins came in higher at 29.8%. Now, the margin was aided by the growth in the small molecule segment. Lastly, Vedanta will also remain in focus because there's an announcement that has come in the morning. Now, the company said that their investment in Anglo-American will be settled by the company and they will get nearly 100 million of profits from this investment. Now, the company had invested nearly $200 million in this company, and now they will be getting nearly $300 million from settling their investment, and this amount is expected to come in by August 13, and post this, the company will have no exposure to Anglo-American PLC shares. That's what the company has said in this announcement today.
Thanks so much for that, Somit. Well, quite a few stocks that you have to watch out for in trade today. Do stay tuned over the course of the day. You'll find all the action right here on Bloomberg Quint Live. Here, let me talk about another development away from the stock markets. India Inc. may offer a double-digit salary hike this year, even as salary growth and job creation have turned out to be modest this year. According to TeamLease, the median salary hike this year is expected to be about 10.9%, down from last year's 11.4%. Why is that? Well, take a look. All right, well, let's take you through some of the stories you'll find on the website bloombergquint.com. First up, the Reserve Bank of India has given its in-principle approval to 6 account aggregators to start work on creating a framework that will enable customers to have control over who gets access to their financial data. According to the proposal, the account aggregators will work as intermediaries between the companies seeking financial data of customers and entities that provide them, which is banks, insurance companies, mutual funds, and even the goods and services tax network. They will allow sharing of such data after receiving consent of the customer. Now, the Parliament yesterday approved the amendment to the Right to Information Act, with Rajya Sabha passing it after negating an opposition-sponsored motion to send it to a House committee for greater scrutiny. The motion was denied by 117 members voting against the motion and 75 members voting in favour. The amendment will make changes, remember, to the tenure and compensation of the information commissioners, bringing them under the control of the central government. That's all you need to know going into trade today. Do stay tuned. A lot more coming up in just a short while. This is Bloomberg Quint.